I was watching him for a bit before I left. He was running hot. It was crazy.
Nice.
Yeah. All right. So July 20th, and it's Monday morning. And if you haven't subscribed to our YouTube channel yet, please do so. Rolland Market Mashup. To me, this almost seems like a make or break week in the market. I think, it seems like there's going to be some new vaccine headlines outside of Moderna, and maybe that's what the broader market's been looking for. But also, we got the recovery / stimulus package, whatever you want to refer to it as. It seems like there might be something that breaks through with that this week. Now, the unemployment benefits expire sometime next week, so I know that's a big thing on people's radar. And it looks like Europe is about to pass another stimulus package of just under $1 trillion. And you got a lot of crucial earnings this week. I'm sure you guys have some you'll be looking at. Microsoft has earnings this week. That's a big one that I know we all follow closely. Tesla, which I don't think any of us own, but it's definitely a stock that's run up really hot. And it'll just be interesting to see if, based on their earnings, they can keep up the momentum, or if Microsoft and Tesla might be what turns the market either into its next bull rally or sends it down. So
Coca-Cola too. Earnings are coming this week.
Which one? Oh, Coca-Cola. Yeah, and there's a lot of big other ones. I mean, you got United Airlines, you got Twitter, you got Intel, and Dad, I'm kind of wondering if with Intel and Microsoft earnings, is that going to somehow affect AMD? I know we've been talking about them last week a little bit just because they're kind of in the same realm, or is that not going to really affect them at all?
Look, everything comes down to what these companies say, not about what the earnings were. And that's what we'll have to see. They could be so overly cautious because of the unknown. I think the big thing to take out of last week is Jamie Dimon, who everyone respects on the street, who's the head of Chase, JP Morgan, basically said we have no idea what the future looks like. And if all of the CEOs and CFOs come out with that kind of look, then the market could be a little shaky for the next few weeks. As far as the stimulus goes, I would say that the market is expecting it. And the real surprise would be if it doesn't happen, or if it's a lot less than what they're hoping for. So I think the market, to keep up, has to see that happen. It's not discounting it not happening, that's for sure. And I'd be shocked if it doesn't happen.
Is there any bear case for the stimulus? Like, even if it does happen, where people, we see a massive sell-off just because maybe we've kind of hit that tipping point where maybe there's a lot of people that actually don't want to see another stimulus because they're worried that we're overly stimulating the economy?
No way. That all is just that the virus is way worse. But again, if you start actually looking at that death rate data, Trump even called it out on that broadcast yesterday. He's like, show me the death rates. The guy didn't even have them, which I thought was absolutely ridiculous. So, that there's no way there's a bearish case for more money being dumped in for people that need it.
Look, if this whole thing wasn't as serious as it is, that Trump puts on one of the best comedy shows of anybody. Unfortunately, he's the president, and it's not funny, the stuff that's going on.
I don't think it's funny. I think it's just he made a very good point yesterday when he was going over the data. He's like, show me the death rates. The guy didn't have them, which is kind of ridiculous when you're going over an uptick in cases. Yeah. You would think mortality rates would be right front and center.
Yeah, but the fact is, with it, the rates growing among young people are in contact with older people, and that will create higher death rates eventually. So that's still the problem. It's not the young people. In fact, there was a study out of Korea that I saw today, and children under 10 years old, they think, hardly spread the virus at all. which is another big case for opening schools, at least in the lower years. And that's one of the best studies I've seen in a while on this
And
whole
a
virus.
year ago, we were worried about overpopulating the planet. Now studies are showing we're actually going down in population on a whole nother level now that, women have way more opportunities than previous generations. And obviously you throw this into the mix, we're not going to have an overpopulation issue ever. That's really where we're heading in the exact opposite direction.
Doesn't
So
that kind of concern you for the overall market then? Because like Mike, your bullish case has always kind of been population's always going to increase, therefore the market's always going to increase. If population goes down, isn't that, and obviously that's a long-term view, so I don't even know if there's a point in us talking about it on here.
It's not that we're talking this century. I mean, there's no doubt, that's our lifetimes we're talking here. So I think at the end of the day, it's something to think about, but I think it's healthy for a world economy where you actually have resources that get allocated correctly and we're not spread thin, even though as it is with the current resources, they're just not allocated properly with making sure everyone's fed, et cetera. But there's no doubt, I think a lot of good could come of this. And we're heading into a new age with robot assistants and we're going to have a much older world. When you think about the average age on the earth, it's going to be way older. That's just the reality of it. So that from an investor's point of view, that's just something to think about in the decades ahead.
So do you guys have any stocks you're looking at pre-market? It's interesting. Nikola looks like it's down huge pre-market. It's the number one stock on the decliner list for today. They look like they're down almost 20% pre-market.
Could be a good day trader.
Also getting some pressure. Yeah, I mean, I wonder if that's just these companies are selling off knowing Tesla's about to have its earnings. They've all been kind of trading together. I mean, they've run really hot. I mean, Dad, is there anything you're specifically looking at this week or any stocks?
Well, I think you bring up a good point. I think the fact that we're now, pretty deep in the summer, and the summer historically has always been kind of a lull. Maybe people are getting tired of going after these speculative names and they're going to the beach for a couple of weeks. I don't know. Not that you can go too far, but just the fact that we're in the middle of the summer, these things have gone on for, feels like months now that they've been speculative rides. It makes sense to me that some of the froth is going to come off these names. I mean, it's kind of out of control, the way they've run these things up.
Yeah, I mean, I guess we've been talking about that really since we've started this show, and it's just been a matter of when, not a matter of if. Can't really have stocks run up hundreds of % in a few months and expect them to hold that. At some point, they're going to need to fill their gaps, and that's just what's going to happen. So, yeah, today it'll be interesting to see. Dad, are you looking at APT? That's been a great call that you made last week.
Yeah, APT looks like it's got more legs. I know Thomas Friedman was on this morning. CNBC was talking about masks. Everyone is saying just wear the damn masks, and that'll solve half the problems we have, and it's the simplest solution. That stock looks like it's going to open up half a dollar, but the chart looks great. I mean, it looks like it's got room, and we'll have to see how it does. But there's a few names that do masks, and that's one of them. I'm sure they're all looking similar as far as the charts go.
So what are the price levels for that stock that you're looking to either load up a little bit more or sell off some?
Well, I sold off a lot. I still have a little bit left, but if this stock breaks 2160, you could actually make a case that it's a buy again. And
I think that is definitely the case that you would make. That means it's a breakout then.
Yeah, and maybe you take $1 out of it or $1.50. That would be quite a trade. But these stocks have a way of riding the wave for a couple of weeks. So,
Dan, pull up CNBKA.
Okay, and real quick before I do that, Dad, on the downside, where would you be looking to see that this stock might be shifting gears and heading back lower? Would it be if it breaks 20?
Well, for sure 20. I mean, if it opened down and started heading south, I'd like to get out quick and look for a re-entry point around 19 and a half, if you could. I think
Got you. Yeah, I will say, Mike, before I pull up what you were just saying, last night I actually figured out how to do contingency trading on E-Trade, which they have it on the platform. Yeah, Mike, I'll kind of give you the lowdown on this when we're not on the show. Basically, there's ways where you could set if-then scenarios where if you buy a stock, you then have two orders out. One is a stop order, another is a sell limit. If one happens, it cancels the other. And it just makes it where you don't need to be as glued to the screen. You can kind of tell the computer what your mind is thinking as far as what you would do for a trade. There's a lot of them. I'm going to still try and dive into it all because there's a lot of different things you could do. But yeah, I finally found out how to do that. So that saves some time and some pressure. So Mike, what's the stock?
CNBK. It's Century Bancorp. I've been doing some homework on them. It seems like there's some interesting insider buying that took place late last week. And
CNBK.
What?
What's the symbol?
CNBKA. Century Bancorp.
Okay. CNBKA.
So that's one I have my eye on, along with, I'll bring up the two others here in a couple minutes.
Just pulling this up here.
Yeah, it looks like a market stock. It's one of those charts that looks extremely familiar that we've seen 100 times in the last couple of weeks. Looks like it had a nice move last week. It popped. Hold it.
So yeah, that's something I'm looking at. Another one is ALEC, ALEC. I think we've brought that up before on this show.
ALEC?
ALEC, like Alex Chauvin.
Okay, how is Alec?
I haven't talked to him in a while. I'm sure he's good. But yeah, these guys are, it seems like there was a lot of stuff going on there last week. And I'm kind of looking at jumping ship here.
Stock's been all over the place.
Yeah, this is a tough call. I mean, it's coming down to support area, which is about 2060 to 21.
Yeah, it looks around oversold. It's starting to look appealing.
You just don't want it to break that level. If you do buy it, you want to have a stop in there.
See, this is a situation where I wouldn't buy this until it broke 23.75 on the upside, personally.
Which it could be this morning.
Well,
yeah.
Yeah, you just need a reason, some reason to buy it. And
the one other one was TCDA, which is a pharmaceutical company, which looks like pre-market. It's up a bit. It was up to end the week.
CDAX?
TCDA.
Oh, DA. That's another one that had a big fall last week and is in new territory on the downside.
Yep.
Yeah, I almost think that the short anything under 1680. And if it breaks 1680, then maybe it goes higher. But on the downside, it looks like it can come lower.
Yeah, it looks like it needs to do some work before I get in that one, unless there's a story.
There's a lot of stories behind all three of those. That's why I have my eye on them. I like stories. I was talking to Sean a bit. He had a great point. The notion of looking at these companies that are pending FDA approval that went either way up or way down beforehand, and kind of like Sean's been going off the mentality lately. He just started getting into this whole day and swing trading. He's like, what I'm starting to look at are the largest laggards from the days and weeks before, and seeing if some of that is just naturally the sentiment of oversold, off of it bouncing back a bit, off of it being down too much before it goes down again.
Well, it all depends. Like if you're talking about pharmaceutical companies that are pending approval or have gotten, some kind of notice from the FDA, and they have to redo these things could take absolutely years to come up and be on the right side as far as the FDA is concerned. I mean, I take Selectus as an example, CLLS. They were doing a phase 1 study. One guy dies of a heart attack. They don't even know if it's from the drug, but they suspended the phase. The stock drops 2 points, and it could sit in a new range for months before there's another development from the company. And there may never be another development. That's the other side of it. So anything with the FDA that needs FDA approval are real crapshoots. And that's why a lot of people buy these biotech funds so they can participate, in a lot of different names. But when you're dealing with one or two names, it's really difficult to pick the winners. It's really luck.
It also seems like it's almost the opposite when you're dealing with day trading and swing trading, where when you're dealing with long-term investing, picking laggers in a group maybe makes sense. They have time to play catch up. But I've found when you're doing swing trading and day trading, you want to ride the momentum. And if you're trying to, buy dips, that's not riding momentum. That's trying to catch companies on the way down, which is
I think what Sean's point is more of catching it in its, like, where the overreaction hits on its little bounce before it goes down again, where he's basically getting at, okay, a stock's down 18% one day, and before it goes down another 5-6, it's going to bounce a couple percent.
Well, the old rule of thumb when communications weren't as good as it is today is a 3-day rule. Company comes out with bad earnings, stock goes down, and it takes approximately 2 to 3 days for everybody to get the news, and then it gets a pop after that. So if you could kind of identify that I think that's what Sean's talking about. But, those are hard to get, and they're small pops. And Danny's right. If you're trying to do day trading more than swing trading, you need to play the momentum names, either on the downside or the upside, so you can get in and out quick.
If you want a momentum name at this point, I suggest even now after they popped, I've been big on Ericsson Technologies. I don't see, Dad, I know you mentioned possibly for me to sell off a couple hundred shares to take profits. I'm holding that. If anything, I'm thinking about adding to it. I think these guys are setting up for an outstanding run. I really do. They're in Europe, which I think helps with the narrative this week. And I look at them as crossing off all of the check marks to being very bullish in the years ahead here. I really think that they're set up for a next level run. So
then that becomes a long-term core holding.
Yes, that's what it's going to be for me. It's a 5G telecom company. When I think of where the world's heading, how they're set up, they have advantages over Nokia as well, based on the way they're structured. So I'm going to be jumping more into that after seeing their results last week. I think this is the beginning of the beginning for them.
And it's not a bad idea. Danny mentioned last night, E-Trade said a lot of their big portfolio players or, longer term investors or big investors, whatever you want to call it, have been buying foreign stocks. And that's probably not a bad idea going into the election, because it'll take a little bit of the risk away from the U.S. if you diversify. And Ericsson's a good play.
And Ericsson might get bought by a U.S. company.
I don't think you can even think about that.
No, it's not about thinking about it. It's another way that could also be great. Like,
but I don't even know if the Swedish government would allow that. I don't know.
Of course they would. Money. There's always a price where anyone allows anything. That's how the world works, and that's a prime example of it. But yeah, I think it makes sense investing in foreign. What other foreign companies would you guys immediately come to mind here as we head into the home stretch of the election?
Well, you guys are in Booking.com, which is a European company. So I think probably a handful of the foreign companies are actually companies that we might not even on the surface realize are foreign companies and are, pretty popular trading retail names. Like I kind of consider that a booking.com.
But
Like
Dan, how about a Fiverr? We know that's a Israeli-based company. I know I'm not in it at the moment. How are they looking at the moment right now?
I mean, dude, they've been on an insane run. Anytime they sell off at all, they bounce right back. It's
isn't that where we're heading in the world? The way that company's structured, what is the actual downside for a stock like that at the moment? Is it getting to the point where it's overbought, or are we looking at that turning into the new way of the world with the job market? And you guys know for years I've said Monster.com and the way of getting jobs was dead. And now the market's finally catching up to that.
Look, I think Fiverr is a great company and they have a lot of upside and they cater to the new era. It's not that.
The symbol so they know what you're talking about.
Fiverr symbol is FVRR. And, we started talking about this stock when it was in the low $20. Yeah. And it's basically a company that allows you to outsource all different types of work, mainly digital kind of work.
Around the world.
Around the world.
How valuable that is.
Yeah, for pennies on the dollar. So our company's gotten really good quality videos made, if you need to get stuff edited, if you need to get a website done. So it definitely caters to the future. I mean, the big thing is at some point they're going to be fairly valued for what they're doing.
And who's their main competition? Let's think about that. Like, who's their legit competitor in the space that comes off the top of our head? I can't think of anybody.
Yeah, I can't really think of anybody, but I also, when I think about Fiverr, it doesn't necessarily seem like an impossible concept to replicate, but I could see a LinkedIn acquiring a Fiverr.
That's what I wanted to get at. They seem like an M&A target.
They do. They 100% do. And, they've been on fire. So, when I'm looking at the stock right now, short term, it looks like 80 might provide a little bit support, but it could easily break 80 and then go on the downside. I mean,
is that a stock we're going to be talking about in 10 years that's trading in the 300 range, or is this something?
I would think they'd get acquired before then, because I think they'd be a sexy buy for a Google, a LinkedIn, even a Microsoft. I think there's a lot of big companies that it would make sense for to buy this, even like a Slack. And when you look at where this company's
even a Facebook, when you think about it, I'm looking at a Facebook as a Fiverr acquirer. When you look at the way they're set up, I think they're the most likely candidate to buy Fiverr.
Yeah, look, I think Fiverr, let's see here.
Maybe even Twitter, if they got their head out of their ass with advertising potential.
Short term, if Fiverr breaks 81 today, which it easily could, then this stock could easily go way higher. It always looks like it wants to be done and then gives a little back and soars back. It's also corrected a little bit from its highs. I mean, this stock was basically it's about 10% off its highs.
But when we think, Dan, about it, and we were bullish on this stock way before the pandemic, like months ago, when we think, Dad, and you could shed some light on this, winners in the take-it-home economy, or when things even come back post-pandemic, the world has changed with work from home regardless. You're going to see a lot of people permanently working from home. And where we're heading in the world with people helping each other in different countries, you have to think that's going to become more commonplace. So where do you see this company's downside in the years ahead? Because it seems to really focus. There's a lot of parallels with where we're heading in the world to what they're doing.
Yeah, I agree. And I think that's why they're doing so well. And at the beginning,
but it's not like a Peloton where, gyms will open up and they might, trace back a bit. This is different.
And what I like about Fiverr, and then we can move on to something else, but it's not getting the love as other companies. Like, you don't hear anyone on TV ever talk about Fiverr.
But you're starting to see their brand all over New York City on these
commercials. They're starting to advertise more, which tells you that they're growing. And they even said during the last quarter, which was the pandemic quarter, they increased their guidance. They said that they're absolutely crushing it. I was wrong at the beginning of the pandemic, and I thought Fiverr would get crushed because I looked at them as a resource for small businesses. And clearly I was wrong, and I got back in when I realized I was wrong.
They're a labor pool when you think about it. They're a huge staffing pool on another level.
Well, their earnings come out August 5th. I was just looking it up. So that's a good time to see exactly what's going on in that company. And it sometimes it's worth waiting for those quarterly calls just to hear what they're talking
I could see them really having an impressive earnings, though, with when you look at companies even having to bring in resources from afar for who knows what purpose, someone getting sick or them having to cut costs.
But the market is already anticipating, phenomenal numbers or, based on where that stock has gone. So I don't know if there's a lot of risk to wait and see what they have to say.
Well, the risk is if they blow them out of the water and shoot up another.
That could happen.
Yeah.
It's definitely the type of stock that I've trimmed a lot as it's gone up to the point where I wouldn't even care if this thing went down 25%. I would just load up. Like
I might just put in the put option down the road on them. That might be the play there.
Yeah. I mean, look, I think Dad brings up a good point. It's one of these companies that because they've run up so hot this quarter, people are probably going to want to take profits on the earnings regardless of how good they are. I think we've been seeing that a lot. And, there's almost no way around it. If you have the run up this stock has had, again, this stock was in the 20s a couple months ago, and now it's in the 80s. So
I think the pandemic expedited their whole success by years. That's why.
I think you're right. And until people really start talking about it a lot in chat rooms, on TV, I always think companies have more room to run until they're just all people talk about. What are your guys' thoughts on Netflix? I know, they sold off a little last week. Not a crazy
I would wait.
amount.
I'd wait for more of a pullback before jumping on it. I think they'll sell off more.
Yeah, I think the numbers are great for Netflix. It was due to correct a little bit.
I think there's a lot of Disney scare though with them. Why I think there's going to be more of a pullback. I think there's too much of a scare, almost like when Facebook was getting into dating. I think that's what you're looking at right now with the Disney Plus.
Yeah.
On another level for good reason. That's a threat. But I think Netflix, you're going to get a good buying opportunity. It's Netflix. They're not going anywhere.
Yeah. But one thing I think about, though, is as far as I'm concerned, I'm looking at some other ways to get, some TV shows or movies because I'm kind of bored of Netflix because I'm not seeing new stuff. Really.
So buy Roku.
But, we bought Acorn. We're in Hulu now, not for the stock, but just personally what I've been doing.
So that keep in mind Roku, Dad, because they're the all-in-one. If you look at that stuff.
And I do have Roku. And,
you own that?
No, I'm talking about personally.
Well, that's another way to play that. Streaming.
Right. But what I'm saying is I'm not going to give up Netflix, which costs, I think, $18 a month now if you have the Ultra. But I'm not using it as much now. So I wonder if at some point people are going to say, maybe I'll cancel Netflix for 6 months and go to another one. Probably not. But people are getting tired of the same things on there.
And they'll have more things on there. People are consumers. They're not going to get rid of Netflix to then buy something else and sell that. They're going to just consume more.
There's also been a lull in production because of the pandemic. So, I'm sure some things got delayed. It's not like Netflix isn't going to come out with millions of more content for people to watch.
I look at that as a I'm not at all. I don't even own Netflix at the moment, but what you're talking about of people selling it to buy something else, I don't see that being an actual thing.
So, Mike, what's your pick of the day? Let's do picks of the day real quick here.
I don't have a pick of the day. I'm going to just monitor. I like to start the week seeing what's going on. I'll let you guys know if I end up jumping on anything. I bought some Google on Friday, 15 shares. I'm going to be adding to my Ericsson position this week. Not necessarily today, but also looking for getting back into CGC on a pullback, the Canopy Growth Company stock. I'm trying to I made some good money on that in and out. And but nothing else at the moment.
Yeah, nothing's really sticking out to me. I noticed Goldman Sachs is starting to get some upgrades off of their great earnings, the stock isn't reacting. So that's kind of interesting to see if the financials are still going to be stuck in mud here. There's just a real resistance to buying those, and without the financials, I think the market will be sideways at best.
So we need to see like a JPM go up for you to be bullish, Dad.
Yeah, well, it'll give me a better feeling for the general market, not the techs. The techs are kind of on their own.
How about you, Dan?
I'm gonna have my eye on 3 stocks today. One is Plug because I have the short position, and we'll see if we can close that out and maybe reopen it. Play, which is Dave and Buster's. Again, long term, I'm not a fan. Short term, I think it's a good day trading stock. I think if it, if it breaks higher on the open, it's a stock I'm going to be following all day, and then I'm going to be following APT all day too because
APT is a good trader, no question.
Yeah, and I'm going to be glued to these vaccine news headlines because this is going to be a headline week, and the market is going to move on headlines. So I'm pretty pumped for the week.
All right, everyone. Take care.